Hello, welcome to the Aliasoft webinar. My name is Alejandro Delgado, Technical Director of Aliasoft, and thank you for joining us today to the webinar with the topic Prospect for the European Energy Markets in the Global Energy Crisis. As usual, our first speaker today will be Oriol Salto, Data Analysis and Modeling Director of Aliasoft, that will discuss about the evolution of the European energy markets. Then, we are fortunate to have once again several guest speakers from ENGIE that will talk about the financing of renewable energy projects. The speakers will be Daniel Fernandez, Head of Energy Management and New Green Wholesale Business, Ignacio Sáenz, Head of Origination and PPAs, and Rafael Gomez, Head of Market Analytics. Unfortunately, Raúl Rodriguez, Head of Business Development, will not be able to join us today. Please use the Q&A menu to send us any questions you may have, and we will answer them after the presentations. If you want to address one speaker directly, please include his name in your question. And now, I hope you enjoyed the webinar. Oriol, please share your slides.
Thank you, Alejandro. Good morning, everybody. Happy to be here again in our monthly webinars. Happy also to be with ENGIE again. They already been in some of our webinars in the past, always showing very interesting information. So looking forward to seeing what they're going to show us today. I would say I will be showing how the energy markets are right now, showing also how they have been evolving in the last weeks since our last webinar. In the last webinar, we were just at the peak of when the energy markets were increasing prices very rapidly. Right now, I would say that we are better in the sense that at least prices are not increasing. They are still at very high levels, but at least they are not increasing. Better also because volatility is much less right now, and we will be looking a little bit into the future also. So, okay, just to start, just a few words about our company. If you don't already know us, Aliasoft offers forecasting services for the energy sector, covering all the energy markets in Europe. Forecasting that goes from the short term, that is days or hours ahead, up to long-term reports that can go up to 3 decades ahead. We forecast demand and price of energy markets, and also any variable that can be interesting for the energy sector. So renewable energy production, other variables like weather conditions, socioeconomic indexes, prices of CO2, fuels, etc. And not only day-ahead markets, but also intraday markets, ancillary services. So all kinds of markets related to the energy sector. The methodology that we use for forecasting is a methodology developed by ourselves. So it's we call them ALEA methodology. And the strength point of this methodology is that it is a completely scientifically based methodology that gives consistency in the results, that keep coherence over time from forecast to forecast for the next one. And what we can better say that we have been using this methodology for more than 22 years now. That's the first webinar that we are saying 22 instead of 21 years, because last October the company made 22 years. So yeah, a very long period, a long time using this methodology successfully in all the energy markets in Europe. So I will begin with the fuels and CO2 markets. I always like to start this look into the energy markets with a historical perspective of the Brent oil price. Oil price is kind of the global indicator of how the global economy is going. And right now, in the year to date of 2021, we are already at the levels not of the year before the crisis, but even to the last peak in oil prices that we had. Relative historically, it's not the highest peak, but it was kind of like the last peak in oil prices that we had, that it was in 2018. So and we are already there. So oil prices have been increasing steadily since the worst part of the crisis due to the pandemic, and right now we are above 80. Most of the days we are above $80 per barrel. Some analysts, some experts put the price for the barrel by the end of the year at $90. Other experts put it just between 80 and 90. So, but most probably by the end of the year, the average of the year will be at least at the level of the prices in 2018. Gas prices are the ones that experienced the more, let's say, exponential increase that we have been seeing in last month. We were at historically low prices during just after the heat of the pandemic in April, April, May, June. We were seeing the lowest prices ever in gas, and just when we made the last webinar, it was October 7th. We were just at this close to reaching the 100 euros per megawatt hour. So we were seeing prices increasing day by day with non-stop. And at that time, we were not sure how close we were from that ceiling, from the highest price that the gas could reach. Well, that price was reached a few days later, close to 120 euros per megawatt hour. These are daily settlement prices, but the intraday prices reached that day close to, I think they reached 160 euros per megawatt hour, the highest price that we have seen in the historical series. And since then, just when the gas supply to Europe was kind of, well, it was announced that the gas supply would be so it would be supplied as expected. So prices stopped increasing. They kept some very high volatility during the following days. Then, after Russia announced that they would start filling the gas storage facilities that they had in Europe, price registered a huge drop, and since then, prices had been, let's say, as I said, at very high levels, but at least less volatile and much stable. And this is more or less the levels that we are expecting to see if nothing new happens. The prices that we are expecting to see at least until spring, so after the winter, when the gas demand goes down after the cold temperatures during the winter. CO2 prices were also one of the key drivers in the increase in the price in electricity markets. Again, we have been seeing how the prices have been increasing steadily since October, November last year, but the increase was more like a steady, like linear, not as exponential as we have seen in the gas prices. And since the end of August, we have been seeing some volatility, but the level is kept at around 60 euros per ton. Yesterday it was the higher of the last days, 63 euros. So it's not in the graph, but, because the graph was made just yesterday. But again, not far from 60 euros per ton. They have been stable for 2 months now. We are expecting less volatility, and usually following the path of the gas prices. they will be at these levels at least as until the spring, after the winter. Looking at the electricity markets, obviously I will not have time to go over all the European electricity markets. For our clients, we have an online platform where you can have all the information always updated, and information for all the electricity markets, also information on the futures, on macroeconomic data, fuel prices, etc. Also, in our website, you can find all the energy market reports that we have available, covering any situation, any issue that can have an impact on markets and prices. We can analyze, modelize it, and we have all these and more reports available. Looking at the demand, electricity demand in the European markets, here you can see the monthly demand for some of the most important markets in Europe. Obviously, the demand level in every country is very different. All these are scaled so that the average demand in 2020 is an index of 100. So, and we can see several interesting things in these graphs. So basically, starting in January 2020, we can see how all the markets registered an important drop in the electricity demand during the heat of the pandemic. So the lockdown to start by the end of March. So the drop in the demand is clearly seen in April. Since then, by the end of 2020, most of the countries already recovered electricity demand levels close or at the level of the prior to the crisis. And since then, the electricity demand levels have been kept more or less during 2021. Interesting things that can be seen in these graphs is how the temperature, how the weather conditions affect in a different way depending on the country. We have countries like France, for instance, where you can see that the influence of the cold temperatures during winter, it's very clear. And then other countries more in the southern part of the continent, like Portugal, Spain, Italy, where we also have an important, so an increase in the electricity demand during the warmer temperatures in summer. So interesting to see how the weather conditions affect in a different way in each country, depending on their latitude mainly, but also on how the heating systems in these countries work, heating and cooling systems. Looking at the price of the electricity markets, this is where basically we can see how prices have been increasing since the summer, very coherently in all the electricity markets. All of them are interconnected, so this is the kind of behavior that we can expect. Some countries like the United Kingdom are a little bit more isolated, and they have particular electricity mix, highly depending on gas. So it's where the impact of high gas prices having more clear. But basically, what we can see, since the lowest price that were recorded during the April, June, so the worst part of the crisis, since then already recovered by the end of the year, and since then exponentially increasing during the last month due to, as we have seen, the increase in the gas prices. October can be clearly labeled as the highest, the month of the historically month with highest prices. Strictly, it's not the highest price month in all the markets, because UK had higher price during September, but globally we can clearly label October as the most expensive month in the history of the recent history of electricity markets in Europe. Looking closely at the evolution since the beginning of August, we can see that how the coherent increase in prices in all the markets, and how the October the 7th was clearly when most of the markets reach or overcome the 300 euros per megawatt hour. So strictly, it's not the most expensive day in some of the markets, but globally, looking globally at all the electricity markets, it's clearly the most expensive day in the history. Since then, prices remained at high levels. We are talking, we are most of the days around 200 euros megawatt hour, a little bit less during the last weeks, but we are at very high levels, but at least prices are not increasing. So we are seeing how gas prices are kind of stabilizing, and also are the electricity prices. Looking at how the futures market are showing us their forward curves, starting with the Brent oil, we can see kind of an interesting situation that it's usually not what usually happens. So we are seeing, comparing with the forward curve that we showed in the last webinar, so just 1 month ago, a little bit more, we are basically seeing that in the short term, the prices did increase a little bit, but not very much. What we are seeing is an increase at the long-term price, that it's something that is not usually seen. So market agents are seeing some changes in gas storage or in gas supplies at the very long term that are making these long-term prices of the forward curve increasing more than what they are increasing in the short term. A little more, let's say, coherent evolution of the forward curve we are seeing in the gas. So as I said, in the date of the last webinar, we were just in the peak where the increase of the prices were more and more rapid. So the future curves for the short term was close to 120 euros megawatt hour. Right now, prices are more stable. They are still at high prices, close to 80 euros megawatt hour, but at least stable. So the forward curve has decreased clearly in the short and in the midterm, keeping the same level at the long term. Something similar in the CO2 prices. Basically, as the prices in the short term has been stable for the last month, we are seeing basically the same forward curve for the CO2. And the forward curve for the electricity market, we are basically seeing the same behavior that we have seen for the gas forward curve. So basically, in very important decrease in the short term. So Cal 22, it's at least 40 euros less, and then less decreases in the 2023, and more or less the same 2025 and on. The case for the Spanish forward curve, that it's always lower than the rest of the market. We have seen how there's been also an important decrease in the very long term. It's interesting. It's important to remember that these forward curves are not a very well. They are not intended to be an indicator of future spot prices. Basically, here there's no liquidity in this very long term. So basically, here we are having very few transactions that are moving the prices rapidly, or they are just bilateral contracts that are nominated to the clearing house. So basically, they are reflecting the level prices of bilateral contracts at the long term most of the time. That it's not a very good indicator of what will be the future spot price for the market. And just looking a little bit into the future, trying to see what's important when when forecasting power prices. As we have seen, gas prices are very high levels, but stable. So they have been very sensitive to news about how the gas flow, how the storage level are being. So depending on the news, these prices can fluctuate strongly, let's say, but for now, we are seeing kind of an stability. Gas storage are being filled at a constant rate, at least for the last days. So we are seeing a stability right now. CO2 prices also at very high levels, but stable, and we expect them to be stable in the next month. Due to this stability in gas and CO2 prices, we are seeing kind of a stability in electricity markets, also at very high levels. And the uncertainty that we were feeling just 1 month ago when we were just in the middle of this rapid increase, exponential increase in prices, it's not completely over. There's also uncertainty. High peaks can happen again during the winter, but at least this uncertainty is lower. We are seeing less volatility. We are seeing a little bit more of a clear path, at least until spring. And at the long term, average prices for the electricity markets are remaining basically at the same levels that we were seeing just before this episode of high prices, also very close to the prices that we were seeing even before the pandemic. And before ending, just let me announce and invite you to our next webinar that will be on January. We will not be having a webinar in December, and we will have invited speakers from PricewaterhouseCoopers. So that's all. Thank you, Alejandro.
Thank you very much, Oriol. Very interesting as usual. And thank you, Daniel, Ignacio, and Rafael for joining us. And Daniel, whenever you are ready, please, you can share your slides.
Hello, Alejandro. Hello, all. Good morning. I don't know if you can see and hear me properly.
Yes, everything is fine. Yeah.
Okay, thank you very much. On ENGIE side, it's always a pleasure for us to join you. Thank you for the invitation. Congrats for the initiative. And we hope we are able to share with you interesting views and reflections on the evolution of the Spanish power market in this context today. So basically, now I'm going to share my screen. I guess there we are. Yeah. Hi. Very good. Let me put this in presentation mode. Okay, there we go. Everything okay, Alejandro?
Yes, everything is fine. Yeah.
So, well, thank you very much, as I tell you, Alea, for organizing and for inviting us. We are here with you from ENGIE side today. My fellow colleagues, Rafael Gomez as head of market analytics and market analysis and forecasts. Ignacio Sanz is our head of origination and PPAs for upstream, midstream, downstream. Apologies because due to last hour constraints, our head of business development for renewables, Raúl Rodríguez, will not be able to join, but you have their email address in case something related to business development and to potential questions or explore topics on business development projects is there, and myself, Daniel, as head of regulatory affairs and public affairs. So the intention of, well, this is a typical disclaimer that we are forced to share with you whenever we deal with markets. This presentation, it is just a best bet from our expert knowledge, but it is not at all any kind of investment advisory. The agenda for today, well, quick review of ENGIE, because sometimes a utility like ENGIE is, let's say, difficult to, find what's our role and what are we doing. So basically a view of global ENGIE in Spain, in the Spanish market. Then my colleague Rafa is going to deal a bit on doing a zoom on the very wise presentation for Oriol on what's happening in the market today and what do we see for the upcoming mid and long run for the Spanish power market. I'm going to share with you some reflections on the rally on regulatory changes that we have had as of this summer. This is why they quote this, because there are almost news in terms of regulation every month or every fortnight. Then a quick comment on the priorities for business development, and then the results of the auction and where the difference are between the auctions and the PPAs for upstreamers. And then Nacho will drill the relevancy and the excellency and how amazing is the corporate PPA tool to hedge prices for consumers in this very complex moment and complex market. So, well, this is the agenda we have for you today. And now we go through this part. Quick presentation on ENGIE. Basically, ENGIE wants to accelerate the energy transition, to accelerate the change to a carbon neutral economy with solutions very sustainable for the people, for the planet, for the profit of the company. This is our purpose, what you can see here. This is indeed already part of our commitment, our legal commitment in our documents in which the company is constituted and so on, and this is binding for us. We land this purpose through 4 activities, and at the end of the day, we are doing 4 things: renewables, gas networks, thermal generation, and energy-based asset solutions, meaning cogeneration, meaning biogas digesters, etc. Around those activities, we have energy management and trading, obviously, because this is about optimizing and trading power and gas, and we really are front runners on energy transition and also on green gases. But basically, this is 4 activities: global utility, 60 billion turnover, present in the full 5 continents, one within the whole group, although we are in transition, 160,000 employees, a generation mix of more than 100 giga installed, and this year we have almost commissioned 3 new giga of RES. Target is to commission 9 giga in the strategic plan, and as of 2022, 4,000 mega of new RES worldwide per year, 2022-2025. So this is our ambition. These are our activities. I'm not going to enter in full detail, but basically there are concrete facts that show that ENGIE is leading the purpose to build the low carbon system of tomorrow. And you see that we are really focused in France and in Europe and in other geographies in these 4 activities: renewables, gas networks, energy solution, thermal generation, and hydrogen. In Spain, we have a bit of everything: 3% of the market, 2,000 clients, 4 tera power, all in all 25 tera gas traded a year, 2,000 giga of CCGTs, 500 giga of wind, 500 mega of wind, 50 mega of solar, 84 mega of hydro, quite a bunch of projects under development. So basically, you know, we are integrated in the generation value chain, in the retailing value chain for industrials and for B2B consumers. And as of 2018, we are quite active in developing PPAs, understanding the PPAs as an enabler, as a tool that is able to ignite projects in order to let renewable project get financing, have a stakeholdership, also optimize the position, etc., etc. We truly believe that the value of a player like ENGIE is the global competences in the whole value chain, from the design to the energy management, the financing, etc., etc. The more complex a solution is needed in energy transition, the highest the value that ENGIE can provide. And as I tell you, we see the PPAs obviously as a hedge, but really a tool to develop renewables from the equity, from the optimization, from engineering, from the finance, in what we call the ENGIE Global Solution. And we have some examples as you see in the slide. We really love this kind of events. And again, congratulations, Alea, because this is a way to do market all together, to develop market all together. So we hope that we are able to share with you all interesting topics, and also we are happy to learn from your questions or whatever. And we are again at your disposals. You have our emails, you have our contacts in LinkedIn, you have our webs, www.ng.es, www.gems.ng.com. So these slides, they are going to be delivered, and this is quite self-content in order to have info on what's happening. That's the introduction. Thank you very much. And now I give the floor to my colleague Rafael Gomez in order to make a zoom on what's happening in the Spanish power market, trying to explain why we are in the context we are today and what we see for the upcoming years. Rafa, whenever you want. Thank you very much.
Thanks, Daniel. Thanks, Alea, for the opportunity to share with us our view and our content. Okay, and I'm going to try to do a global view of the market today and the forward. Okay, Oriol has just commented many of that, but I only want to remark the message. Okay, first, Daniel, if you can check next, pass the slide.
I'm trying to move it, but
yeah,
it is not allowing me to switch. Let me recharge it. Sorry, because I don't know what. Okay.
Rafael, if you prefer, you can share it.
Let me retry, Alejandro.
Okay.
Okay. I guess here we are now.
Yeah.
Zoom. Okay. There you go, Rafa.
Okay. First, I would like to do a global review. Okay. The table on the right shows a comparison with 2020 and 2021 projection. As you can see, the delta in curve basis is about 200%. Why? But the main driver of this delta has been the demand recovery after COVID period, the emission rally during the first half of the year. Currently, the level is in a plateau at maximum levels. Oriol has just commented. And also, right now, the main driver is the gas. As you know, the European gas storage at minimum level compared with other year, and the scenario is very tight. The situation in Central Western Europe is very difficult and very dependent of Russia action, but also we have to take into account the scenario in Spain, Italy, and France, in the south of Europe, is a little bit different and more comfortable. Now, thinking in future, okay, the more near future, okay, I want to say December and Q1, what can happen? And to do this analysis, we had to elaborate a list of bullish and bearish factors. Okay, in the bullish side, we have three factors mainly. The gas market. If Europe doesn't increase the gas import, the gas level will continue at high levels, something sure. We are very dependent of Russia right now. Additionally, in Spain, we have a local constraint. It's not a constraint right now, but we have more dependency of Medgat and LNG after the stop of GMA pipe. And also the bullish factor is if the drier scenario continues during December and Q1, okay, the price go up. In the other side, in the bearish, we have four possible drivers, okay, and the most important is the reduction in demand. It can happen if the price go up. Also, we can see a global correction, mainly in gas. Also, I don't want to mention that, but if new COVID waves appear, also can affect to the demand and also the price go down. Other aspect that can affect also a lot could be the possibility to start a wet scenario. This is all for the short term. And now in the next slide, we want to mention a little bit our view in terms of medium and long term. Daniel, if you can pass the slide.
Again, it is giving me some problems. Sorry for that.
Sorry, Daniel.
No, it's my, I don't know. I will remain with the, not with the presentation mode, I guess. I don't know why. Apologies for that. Okay, there we are.
Yeah, and this is our medium-term long-term view. First, Cal Plus One and Cal Plus Two are very dry for the current commodity price. They are very influenced for the level of prices like we have now. We are at maximum historical level. In the second phase, till 2025, our projections are aligned with market levels. On this period, the main driver will be the speed of the implementation of new RES capacity, solar and wind mainly. And the most important scenario, and more linked also to the PPA, is the scenario from 2026 in advance. On this period, we see a very uncertain, and this uncertain can move the market up or down, following the next drivers. Renewable capacity to be installed. This is the most important, and this driver will be drive for the auction that the government has to publish, also the PNIEC guide, and also some constraints in the grid asset that we are suffering right now. It's something that the government has to solve with the new regulation. Also, other important factor that can affect to the long-term curve is the new plans that the government has. If we are going to follow the PNIEC route or we are going to postpone. Other aspect that can affect is the flexible demand integration. When I say flexible demand, we said electric car batteries, hydrogen, self-consumption. This is very important in terms of level of prices and also in terms of the integration of the solar and wind generation. Other aspect that we want to remark is the capacity market that we have to develop. All the scenarios contains the assumption that CCGT is going to continue in the market, but the scenario without capacity market for the CCGTs is not the best. Probably capacity market are needed for the future to continue with these scenarios. And the last aspect that we want to remark is the commodity price. Okay. We have to check if the system is going to be continue in the gas dependency or can be a little bit more drive for the renewable. And the last part is the interco capacity that will to be developed. Okay, PNIEC plan is very ambitious in terms of interco capacity. One of the capacity between France and Spain to be developed is ongoing. And we believe that in 2027 could be active, but the doubt is the other capacity that the PNIEC mentioned. And this is all the driver and the factor that we can remain and that we can mention for the future. And now it's time for our colleague Ignacio Daniel to do some remarks in the regulation, in the regulatory framework, and also our PPA view.
Thank you very much, Rafa, for the market update. Well, on regulatory evolution as of summer, basically, as we have seen with Rafa input, we have a spot market skyrocketing. The main problem the Spanish government has is that in Spain, 55% of the household consumers below 10 kilowatts of capacity installed power on an annual basis, they are indexed to the hourly price. So, and this hourly market is very marginal driven for gas and hydro units at opportunity cost of gas. And you know, the wholesale price is related, as we see here, 35% to the final price. So basically, if the wholesale price doubles or even goes 3 times higher, then the final price paid by a consumer rises by 30%, 40%. This is today's case. Also, this is impacting heavy inflation, and the government is extremely concerned on this impact of the evolution of the wholesale market in the domestic prices. This is creating major pressure in the media, even if it is relaxing a bit, but major pressure. The news, TV news, the radio news, they are opening almost every day with the wholesale price for the day after, which is quite crazy. That there are many interventions, or the many interventions have happened in order to try to content or to reduce the final price of the paid by the Spanish consumers. Basically, in order to sum up, there has been 3 moments, June, September, October, and it is expected that a new moment come now during November. So basically in June, there was a reduction of VAT on generation tax, and a couple of project law were sent to the parliament, a project to socialize feed-in tariff for renewables, and a project to ask to renewables and hydro commission before 2002 to pay back some money due to windfall profits on CO2 emission rights, because before CO2, the emission trading system was not in place. These laws, they were sent to the parliament during summer, and they are not yet approved. And honestly, the visibility is very low. Although, well, it is expected that this will have an impact at about 400 million euro in electric companies, and the issue of the renewable feed-in tariffs, it may have an impact on oil and gas retailers. But this is a change that it has not come yet, and there are doubts whether it will come or not. It seems not this year, but well, honestly, there is no visibility in the timing of the parliament to move forward with these laws. These changes, they were not enough, and in summer, everything continues to grow. As you see in the chart, in September, we reached spot prices above 200 euro daily base load. So mid-September, the government proposed another set of reforms, reducing more the VAT and enlarging the VAT reduction till March 2021, enlarging the cancellation of the generation tax till the end of 2021 as well. Also opening a reform process for the way in which the domestic price is fixed, also reviewing the regulation for the aid optimization, and a very controversial measure, which was asking for claiming that there are windfall benefits on basically all generators or inframarginal generators, despite the hedges, despite PPAs. Basically, the assumption was that all generators that are not marginal, that are not gas, are benefiting from skyrocketing spot market, and therefore I have the right to claim back part of that money. This was extremely controversial, and major contestation happened during mid-September and during October. Some companies stopped investments, and also a major legal battle was anticipated. Also, all associations, renewables, incumbents, small players, retailers, even the European Union claimed that this was an intervention on the wholesale price and on wholesale market, and that was not aligned with European standards. So this, the government approved the new Royal Decree law ending October, basically reducing a lot the effect of September Royal Decree, basically approving an exception for all generators that are hedged, either intergroup, either through a PPA, either through a hedge with a fixed price. Obviously, when you are hedged at fixed price, you are not capturing the spot price, you are capturing the settlement of your hedge. No? So, well, what's the conclusion of all this? The government, through the September Royal Decree, was expecting to collect 2.7 billion euro, and now it seems it's going to be only, between brackets, 200, 300 million, so there are still 2.2, 2.3 billion pending to come, if the government wants to honor the commitment announced in September, which is to keep domestic prices at the level more or less of 2018, discounting the inflation effect. So obviously the government needs to find that money, and it seems there are massive rumors as of 10 days ago that the new change will come, basically reducing the cash in which assets under subsidies for special regime, what we call recovery assets, so basically renewable assets, making a cash reduction because these assets, they are overpaid this year. So the government wants to implement something which is, okay, give me your excess cash already today, instead of reviewing that in 2023, which is the thing expected. In the next slides, what you can see is going a bit deeper in, this is September change. These are the details of September change that basically, as we see here, huge critics for incumbents, for associations, major flaws, because, you know, at the end of the day, this was an unfair companies were accused of having windfall benefits, which is not at all the case for generation when it is hedged. There was major contestation, and then late in October, a new Royal Decree was approved, basically neutralizing all the effect on all the concept of the windfall benefit. It is really reserved to agents that are really exposed only to the day-ahead market without any kind of hedge, either with retailers or with banks or whatever. And well, here what you can see is about more reasoning on why there are major contestation. What was the view of the government? That basically it was a simplification, claiming the agents to, or assuming that the agents were only at the spot market, which is by far not at all the case. And basically the arguments from Brussels, from the sector, etc., etc. Then, so a bit of a nightmare, because at the end of the day, well, you see, we are regulating, let's say, without that, let's say, cold reflection on impacts and changes. And obviously, in order to honor the political commitment that the government needs now to find some money, roughly, as I was telling you, 2.2 billion euro. The idea is to say, okay, there are already assets under special regime, under what we call recovery regime, renewable assets that were in place in 2013, between 2013 and before 2013, after the last big change in renewable remuneration. And the point is that the government has to review the parameters or the cash complements to these assets in 2023. The government proposal is to say, look, instead of reviewing your income in 2023 at the level of the black line, as you have an excess cash versus the expected profitability, you have an excess cash now. I'm going to review your excess cash position now. I am going to reduce your cash now. And as of 2023, I am going to give you better remuneration instead of doing the review in 2023. So what the government has ensured is that this potential new change will keep the committed internal rate of return, the committed profitability for the renewable assets affected. And it is just a cash effect, as there is an excess cash now versus the guaranteed profitability. The intention is give me this excess cash today, and I'm going to give you a better protection as of 2023 in order to ensure the same level of reasonable profitability. Obviously, from a viewpoint of a generator, this might be acceptable, only it may affect some condition of the financing, but it should be okay because these assets, they have this guaranteed profitability. The problem is that depending on the implementation, this measure may severely impact retailers and market agents and brokers, depending on how the cash flows are implemented. Obviously, 5 big changes in 3 months, some of them implemented and then moving backward, etc. Well, the situation is quite unstable, although in our view, this is just a conjunctural reaction to a very conjunctural problem. And as you have seen in Rafa's slides, as you see, with the commitment of PNIEC, etc., and so on, we don't see a major structural change in the mid and long run. We see this as a temporary crisis that will be solved by spring. We understand as an agent that the government has to put together measures, but what we would suggest is a bit of calm and a cool reflection, because, we cannot solve one problem by creating 4 additional problems. I hope this gives you a view on what's happening in the market, what changes, basically minor changes, but a lot of noise. Then, in terms of PPAs and so on, well, very quickly, because this is not very new, we have already mentioned this slide in previous webinars. Basically, a PPA is a hedge and stops volatility. And there is volatility in the hourly market, but also in the forwards. You see that CAL22 in February, when we did our first webinar this year, it was at 48, and now it is at 114. No? And the average of the curve may have switched from 40 to 50 euro mid price in 9 months. No? So the PPA gives this red line. The PPA avoids volatility. The PPA gives certainty. Is a hedge. The PPA is about protecting income, not to lose. It is not rocket science. PPA just ensure cash flows, and it has to be a tool to ensure cash flows. This is how to price a PPA, it's a matter of a lot of factors, as you can see here: regulation impact, evolution of the markets, modeling, expectation of the parties. Something very complex because you have to align a lot of interest, lenders, politics, modeling, advisors, etc., etc. It is something very complex, and all these factors impact the price. And the message here is don't keep it as simplistic as making the average of a screen, because that's a reference, but obviously there will be always a big delta because there are guarantees costs, legal costs, uncertainties, modeling effects when you switch from base to peak, and so on and so on. So basically, there are many, many factors on top of the markets defining the price. Obviously, the markets, they are a reference. And then, well, this is quite well known as well. A PPA is very attractive for a developer because it fixes a price, but it can be a PPA from the private utility, but also in the Spanish market, as you know, there are auctions also tendering somehow a public PPA. The message here is that the auctions and the PPAs from utilities, they are different worlds. We have not to compare. It is comparing peers with apples. Developers have many options: merchant, PPAs, private, PPAs, public, auctions, making hybrid models. The markets in the short run are quite high, so a solution can be, okay, I go merchant 2022, 2023, and I go for a PPA as of 2024. So there are many, many alternatives. And our message here is that we shouldn't comparing a PPA from utility and the result of the action is by default a mistake. Why? Because liquidity is different, timing are different, flexibility of one product and the other are different. The requirements to negotiate are much more different. You may spend 1 year to negotiate a private contract between banks lending, between the off-taker and the developer, compared with the auction that you go to the auction one day, and then if you win, you have the PPA, because there is a standard product guaranteed by the state. So all these factors, the different counterparties, different guarantees, different legal requirements, different timing, flexibility. The private PPA, typically, if engines are off-taker for 10 years, it's 10 years and there is no flexibility in the volume. In the auctions, there is flexibility. If you deliver the volume in year 9, you can skip, you finish, and then in the tail, you can go back merchant. So all this reasoning explain the difference between the quotes from a private PPA and the quotes from the auction. In this last auction, you see here a summary. You see the prices between 30 and 33, slightly different on the technology, but more or less 30 for wind, 32 average for solar. Prices were higher. Average prices were 24, 25 in January. Now 32, 33. Why? Well, market much higher, and also much more problems for developers in order the supply crisis for the engineering, for panels, etc., all that has been reflected and internalized in the price. If we compare this 32 with the auction, maybe those days the private PPA was at 35, 36, but again, in that case, we are not comparing peers with peers. And our tip here is that, each engine has to, each company, each developer has to put everything in the mix, in the cocktail, and choose the product. As an example, ENGIE as developer, sometimes we go to auctions, sometimes we go merchant, sometimes we go with private PPAs, and we are building our portfolio by mixing up all the products. So that's it from the upstream side. I would like to finish with as developers, we keep on seeing a bottleneck in the permitting. We think that there is a strong political commitment, there are auctions in place, there is a very good political momentum in the long run in order to invest in Spain renewables. The renewable auctions, they are a good sign, but they are not the only way to finance, as you see. But there is still something to improve in the permitting speed in order to make the PNIEC a reality. That's for the upstream, and now I let the floor to my fellow colleague Nacho, head of origination. Nacho, the floor is yours. Feel free to react, please, on what I have said for upstreamer, and go for your visibility on the PPA, the corporate PPA for the upstreamers. Thank you.
Thank you, Daniel. Thank you, Daniel. I don't know if you can hear me properly. I hope so.
Loud and clear.
Okay, super good, super good. So you are as a master of ceremony Do you want me to manage the presentation or can you do it for me, Daniel?
For you.
Okay. Super good, super good. Thank you. So we would like to share with you a couple of ideas today, briefly ideas, try to send you a couple of clear messages about the situation. The first message would be, I told you, I told you in February. So it seems that what the market was expecting, maybe Rafael can give us more detail in some minutes. Market was expecting with the inclusion of the introduction of negative prices, by a real reduction in prices has not happened. As you may know, the government right now has removed the limits that used to be in 0 and 180 up to -500 and up to 3,000 euros megawatt hour. As you may see today, we have reached prices of 220s. Now the prices are relaxing just a little. But the first idea that we would like to share with you guys is that the most speculative thing you can do is to do nothing, because you are exposed to market with a big volatility, not necessarily with a good liquidity enough in a given moment in time. So first message would be to do nothing is to be speculative. Now we're going to go through the two main differences that we can the two main tools that we can use to handle the risks, because never forget about this. This is not a matter of beating the market. This is a matter of risk management. Yeah. So when we approach to PPAs or when we approach to hedges for pricing, we cannot go to look ourselves to how to beat the market. We need to look ourselves in a space of how managing the risks. Okay. So I don't know, Daniel, if we have gone very fast. So I'm afraid this is the
No, completed. Tell me which
no,
slide
the previous
you
one.
want to
The previous one was good enough.
Sorry, perfect.
Okay. This is, yeah. So we have got here these two main strategies, that is the swaps and the PPAs. Everything has got his pros and cons for sure. If I look at the swaps, maybe the biggest cons that we have got there are these kind of structures are financial products. So at the end of the day, not all the corporates feel so happy on transacting by doing financial contracts. Taking into account that a swap is a financial contract, is not linked to your physical consumption or is not linked with your physical liability. So at the end of the day, maybe you are having some issues on your physical consumption that do not allow you to consume or whatever, but the financial contract will be there. Even in scenarios when you close your delivery points would be also liable, companies would be also liable to accomplish this kind of contracts, so financial contracts. So the good part of the thing is that they're very well-known contracts. We have got some market standards like ISDAs and so on that are quite easy, quite very well known, and there are no one-sided contracts in this kind of contracts. So at the end of the day, are very good ones. They have got, as we say here, it's public visibility and it's quite easy to make single shots. Yeah, so you can make clips on quarter or years or 2 years, so it's quite easy. As said, the cons are very limited liquidity and could be subject to you have been entering in with counterparties that for sure not are always trying to manage the risk, are also looking for to make some money based on fluxes. Okay. So what we mostly strongly recommend to you guys are PPAs in their different structures, on fixing price, discounts, options. So we have got a lot of potential possibilities there. The good part of the thing is that there are tailor-made products that for sure will be available to every single need of every single one. The next part of the thing is that this kind of things are also linked normally to green assets. So GOs could be included from there. Also now we are seeing more and more these days that the additionality, it's important. People wants to bring something for the planet, not only consuming energy, but and also consuming green one, but also trying to support the creation of new facilities. So this is a good one. So geos could be included. Maybe from a cost point of view, we are talking about guarantees and legal complexity that is not always that easy. The time to market for this kind of contracts is not always that fast. We're needing 4, 5, 6 months for this, so it's not always that easy. And maybe the price fixation could be changed slightly during the process of the negotiation. Yeah, so we start to negotiate a contract in February, and we are closing it in June or July. For sure, the price will move, and maybe slightly difference of pricings will be there. Yeah? As a recommendation, we would suggest to work with companies as Engie for sure, but not only because we think that it's better only for us, because we think it's only better for you guys. Because at the end of the day, if a corporate is trying to onboard such a kind of contract with the complexity that it's got, maybe he's not going to be aligned with the necessities that a PPA is on the same side from the developer. Yeah? So developers, mainly their approach to the PPA markets, looking for a bankable solution. So they're trying to finance their assets with more or less 70% of a leverage ratio. So at the end of the day, they are needing some guarantees. And the guarantees normally are strong. So take into account that for a facility of 150 megs, banks are going to ask to the off-taker for guarantees of 30 million euros, more or less. So we're talking about strong guarantees that normally not all the corporates are willing to provide. Not all the corporates with the credit rating good enough are able to provide PCGs. So one guarantees are needed. So we are jumping into quite complicated situation. What we always like to say is that the market price evolution can go in any direction. We don't know which is going to be the direction that the market is going to take, up or down, and more in detail in a long period of time. So we do not try to beat the market. What we try is to manage the risk. From Engie perspective, when we ask as a developer, and from our customers when we provide services to our downstreamers. Normally, people is approaching to this kind of contracts in two different ways. There are people only looking for pricing that normally, or in this kind of the market, when we have got a strong contango with a high prices on the Cal Plus One and the prices go decreasing because the penetration of the renewals are good ones, because people are willing not to pay high prices for the next year. They can take advantage of the average price of a 4, 5, 6, 10 years. So that's good enough for them. And there is other kind of companies that are oriented for green products. So as we said before, these kind of companies are always asking for having GOs, guarantees of origin, but also additionality. They are trying to sponsorize facilities created on brand new ones. I mean, not the old ones already created and already financed, but they are looking to support and to give some kind of sponsorship to facilities that are brand new ones. As mentioned by Daniel before, this PPA market is not only a market of subsidized one or government products or auction or midstreamers or downstreamers. So if we want this market to grow and we want to create this industry and everybody wants to take benefit of this kind of things, we need to provide a holistic view of products. For sure, auctions are needed, but for sure, corporate PPAs are needed, and for sure, midstreamers playing the role to accommodate the generation curves coming from the upstream to the necessities coming from the downstream. For sure, these kind of companies are very well needed. And always, price is not linked only to a market. It's also linked to the assumption of risk everybody wants to assume. Yeah. So if we want to assume a pay as consume with full flex of consumption, with a lot of capacity to fix indexation prices for the ancillary service and so on, if you are trying to translate as a corporate all the risks to the developer, that is not going to be feasible. That only would be feasible to trespass to companies like Engie, and that has got a price. That's why Daniel told before, it's not a matter of only power, it's a matter of which are the risks that you want to to trespass to me. But it's also about how much I'm financing you, because you have to take into account that in a prices of 150 for the next year, and average price of 70, for instance, we're talking to subsidize 80 euros. So it's a matter of credit risk and the cost of capital. It's a matter of guarantees and so on. So more or less, these are the ideas we would like to share with you. So I think we have got a challenging view for the market on the next few years. For sure, the renewals are growing. This is a matter of fact. More and more corporates are trying to onboard themselves in this kind of products.
Very good, Nacho. Thank you very much for all your tips. I think we are, Alejandro, almost in the timing or even a bit out of time. So basically, I think the conclusion that the wrap-up has been perfect in terms of market and regulation, conjunctural crisis, but very brilliant future in terms of opportunities for upstream, all those that comes from the PPA, the auction, merchant, the combination, and I think and then all the points that Nacho has highlighted for corporates, it can also for developers to take into account time, expectations, volatility, and basically, having access to this kind of hedges is not from one day to another. Moreover, in a very complex context, we hope that all this info gives a bit of light and understanding to all of you guys that has been on the other side of the presentation. And basically that's it. This is what we have to share with you. As you have seen, we have the passion, we have the energy, and we are here to help. Muchas gracias. Thank you very much. And whatever you need, you have there our emails, our email addresses, etc. I think we are run out of time for questions, but we are happy to answer to whatever query in that emails. And that's it, Alejandro, on our side. Thank you very much again to Alea for organizing this. Thank you.
Thank you very much, Daniel, and Ignacio, and Rafael for that great presentation. And as Daniel mentioned, unfortunately, we have run out of time, so we will answer the remaining questions directly by email or any questions that you want to send us. And of course, we invite you to join our next webinar in January with guest speakers from PricewaterhouseCoopers. And thank you again, Uriol, Daniel, Ignacio, and Rafael for your presentations, and the audience for joining. Have a nice day.